What's going on? Welcome back to the channel. So today when I talk to you about SERV Robotics, I want to go over some of the current data points, break it down on what's been really coming out from the company itself, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So SERV did go down 8.32% on Friday, alongside much of the greater market. A lot of fear started to surge, so inflation fears, and through that, even people are talking about recessions. So that has escalated very fast, but 1175 the low, 1342 the high. So ever since it did sell off because of the news that came from Nvidia selling, it did recover fairly well. So you can kind of see it did go up roughly around here. So kind of bounced off that 1175 range, had a peak of roughly 1411, give or take. And then since then, various things have come out. One is insiders selling, so I'm going to go over that in a second. And then you just have the broader market fears that did kind of take hold on Friday. So it's a very bad, unfortunate scenario for SERV, but they did also, on a side note, announce the date of their earnings. So as you can kind of see, date of their earnings is slated for March the 6th, 2025, after the market does close. And so right now, the current estimates are negative 13 cents for the earnings per share, 254,000 for the estimates for the revenue, and no changes from the last 90 days for earnings per share. So it is what it is. I think historically speaking, if we kind of quickly pull this up, so this is SoundHound, but pulling up SERV, historically it looks as though obviously they haven't really announced all that many in earnings, but it's about a good 66% likelihood of them kind of beating. Again, based on this information, looking at this column, 1 day post earnings. So it went up 16.59 last time, down 16 the one prior, and then up 9. So implied move right now is around 19.12%. So it should be a very volatile time ahead. But aside from that, there was this that did come out recently. So a Form 4 that came out on February the 20th did show that this individual right here, who is 𝗖𝗢𝗡𝗡𝗖𝗧, if I'm saying that right, who is the Chief Hardware and Manufacturing Officer, did exercise some of their stock options, so right to buy, and then they sold it straight out. And it was part of this plan, so they already did write it and kind of have the tentative transactions already pre-planned. So nothing crazy, and it's actually looks like it was planned as of August 16th, 2024. So it's not new information, but still nonetheless, it is what it is. I'm sure they feel like crap the fact that they did it then and not at that $20 range, but obviously you can't always time it exactly right. But nonetheless, in my opinion, since this was planned, it's nothing really crazy, not a reason to sell, nor is it a reason to buy. So it's kind of just stuck in limbo. But aside from that though, shorts. So shorts did increase 133,000 shares, 26.45% of the free float is being shorted, works out to be 7.61 million shares. Cost per average has been edging up, so currently 40.69%, minimum is 24. So because of the sell-off, what did happen, shorts actually took that opportunity to return a lot of their shares. So went from roughly around 28, almost 29% short interest to this kind of stage. And actually I'll make this a little bit bigger so you guys can see. So ultimately this section right here, they did return down to around 15%. So they took advantage of all the fear, and then ultimately they just doubled down once again. So kind of interesting, but I think no matter what, one thing that is really affecting SERV is somewhat the low volume. So 8.14 million shares being traded, for instance, on Friday, but it's been a very similar scenario, lower and lower volume. And if you have a stock that's heavily shorted, having low volume is absolutely horrific, because that kind of goes to show that shorts are dictating exactly what happens with any of these stocks, like a puppet, essentially. So this is why you have them, even though, for instance, on Friday, they did increase 133,000 shares. If we kind of look right here, they're freely just doing whatever the hell they want, ultimately. So it's not necessarily the best kind of stage, but hopefully with this upcoming earnings, they'll be able to really hit a home run from that. give good future guidance, because even though right here these are the current estimates, I feel like the market might be fairly forgiving for the actual this and focus more on the future guidance. Same as what I actually mentioned from last earnings. So they did miss on the earnings per share as well as revenue. They missed on revenue quite a lot actually, so by 88.9 thousand, but they did give somewhat good-ish future guidance. So it's all going to be that. One thing that is also coming out this week that could potentially affect SERV is this. So Nvidia's earnings after hours Wednesday. So that one is going to be a absolutely huge one. Similarly, that I think the market's going to be looking at Nvidia earnings to be the saving grace. And so yeah, we'll just have to wait and see what does come, but maybe from their earnings, this might be, you might hear some warning signals of them maybe pivoting. This is why they did sell out of SoundHound as well as SERV. So we'll just have to wait and see, but that is again coming out Wednesday after hours. Moving over to options. So on Friday, there was 1.35 million in calls, 1.19 in puts. 45% of all the options being done were bullish in nature. So that's kind of a good positive. Of the call options that were purchased, you see a consensus for it to be roughly around that $14 range. And so the week ending March the 7th, so that would encumber their earnings. You're not seeing much options being played from that yet. So most likely next week, people will start to think about the following week earnings and stuff, but the bears are anticipating for it to be sub $11 next week. So just kind of take notice of both. But these are all the transactions that did occur on the secondary market on Friday above $100,000. So not all that much, but it's still good given, again, the lower volume that I did bring up. So you really want to watch for this, because as soon as you have institutions not really paying attention to it, then this is where you'll see crazy pullbacks in the stock price. But as of right now, 1175, that kind of general range has been holding. But aside from that though, with it at 1201, it is trading between this S1 and this S2. So 1135 is going to be a strong support. Flip side, 1393 is going to be the next strong target / resistance. So kind of just take note of that alongside these right here. So on the actual chart itself, it is below, I'm looking at the 1 week chart on a side note, but it is below the ALMA, and right now 1196 is that actual 50-day moving average. During the overnight trading, it did take it right below that, so 1194. So essentially, you really want to watch for that 1196 for it to close above that come Monday. If not, then you'll see more of a continued pullback. So hopefully it's able to kind of gather some good momentum and some buying, and over the weekend people might be actually thinking about why this is and was a overreaction from Friday. But that's just my own opinion, of course. And actually, off topic of SERV, I think just the market, like all the data points out there have been signaling that inflation is going up. So it's not like we had some epiphany on Friday. This has already been priced into the market that inflation is increasing. Like we've known that for a good 2-3 months. And for people to now start saying, I've seen a lot of this, consumer debt is at all-time high through credit cards. I've seen this for a long time. Like a lot of people generally know that consumers are really bleeding, but at the same time, I think they are adapting. So during COVID, when people weren't making all that much, they cut down. When prices were going up in 2023 and also 2024, people adapted, stopped eating out. They did that. So I feel like the market is just treating consumers as idiots, as though, oh yeah, the tariffs are going to be the final straw and that is it. It's going to cause mass panic. Consumers aren't going to be able to buy food. And that's just crazy to think that, hey, maybe I'll just cut down a little bit more, or I'll just stop doing this, stop doing that. I see Friday's like pullback as very unjustified, but that's just my own viewpoint, of course. But with that said, like I went over all those kind of points, just kind of watch for that generally speaking, and hopefully just watch for a nice recovery and big money actually seeing some good value with SERV. So let me know your thoughts. Don't forget to hit that thumbs up. Where do you see things going by the end of the week? Are you bullish? Are you bearish? Are you neutral? Or what's your general thoughts? In my opinion, I think the fear is going to continue, even though, like I said, it's not justified. Sometimes Wall Street just is looking for an excuse just to have a correction. And I think that is this time around. Wednesday, NVIDIA's earnings is going to be that deciding point whether the market does move higher or if it starts to really escalate the fear. And NVIDIA, like their future guidance and demand, that's what the market is really going to be paying attention to very closely. So let me know your general thoughts on that. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then one final thing, pop over to my Patreon where I give buy signals on stocks, options, and crypto. Many of them have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that, appreciate all of you watching.